Hi, I'm here with Scott Stewart, who's the general manager at Glassroom in Toronto. And in our ongoing conversations about media effectiveness in Canada, I wanted to note something that I thought was really interesting. The other day, I noticed that Facebook was offering something called GeoLift, and they're looking at geography. And so, jumping in, Scott, like if the digital platforms are getting into offering some view of geography, what do you think? Is this the place? Like, is geography going to be a meaningful, sort of important thing to be looking at?
I think it always has been. I mean, you know, it's always been important. It's always been a media tactic. I think it got very easy, especially on national advertisers, to give way to that level of targeting and favor strategies like national ratings or national buying approaches instead of looking at geography down to postal code level. That's something we practice here at Glassroom. Obviously, efficiency is in the effectiveness, and specialized solutions. I don't think it's unusual for digital people to be talking about geoanalytics. We've been using that as a strategy to optimize for quite some time. I think there is some additional, I guess, quickening or hurry upping on geoanalytical capabilities when we started talking about some of the pending Chrome changes that seem to kind of not stall but slow down a bit with the extra year's grace. But it's certainly been a big part of how we've been doing business, and an area of emphasis from a planning perspective and how we target consumers. It's part of our planning process. It's part of our mandate. It's part of how we approach the marketplace.
Mm. Well, you've mentioned two really important things there, or at least things that I think are important. Is one is postal codes, and the other one is the identity issues around what's going on in the browser, the browser capabilities. Now we've got Apple doing the hide my email address stuff. I mean, you've got this balance. Like, if identity is going to start falling into weird places, are you saying that postal codes is actually a way to sort of get us across the bridge?
Absolutely. I think there's so much value in looking at your consumer at the geo cohort level.
Yeah.
It not only helps identify clusters or be a lot more precision focused with your delivery of media
Mm.
from a spend perspective, but it also helps you analyze the channels you're using. Obviously, we're going into the upfront shortly, and one of the big topics right now is media inflation. I just spoke to media in Canada last week about that. But one of the things when we do start looking at media inflation is evaluating, the cost of buying media at a regional or national level. When you start identifying your customer at geo cohort level, and you realize that instead of buying Toronto at the market level, you probably only really care about 18% of the postal codes, and the true efficiency is around finding your customer, sorry, at the most granular or precise level. So it really makes you kind of reevaluate the media economy, the channels you're using. And in situations like this, we start favoring channels that have higher degrees of targetability, looking at postal code level geography versus, wide blanket coverage against very basic socio-demographics.
So this sounds like a strategy, like a media buying strategy that people in procurement would be interested in hearing about, because it's like, let's talk about efficiencies, and then which they love to hear about, right? And then the other side, of course, is effectiveness, which the marketer is like, we don't want to sort of like chop everything down to nothing. We need to get our jobs done. So, I mean, have you talked to procurement people about this as you're heading into these upfronts?
Well, I think a lot of what we've done from an infrastructure perspective and around bringing accountability, to give the organizations we work with a clear insight into dollars spent and transactions created. More and more of those conversations are actually starting to happen at the CFO level. So
Yeah.
we try to equip our senior marketers with the ability to report back to their organization, with the accountability they need to demonstrate that they're fully weaponizing their marketing dollars, that those dollars are, being used to not only target consumers at the most precise level possible, but also those dollars are converting into sales or some form of performance KPIs. And I really see, geoanalytics as such a big part of that. The other side of it too is when we start understanding, ad performance at the FSA level, we can completely re-rank markets at, a more micro level and really understand how to weave a better national strategy than just, buying channels that offer very macro level targeting, when we do have the ability to, weave together a much better, more sophisticated map of where our customers are. But not only the customers, where they are in terms of composition at the postal code level, but also, other factors around, looking at performance from an interest perspective and also from a sales perspective. So we're looking at multi-dimensional ways to kind of show accountability, but also try to understand what success is for the marketer beyond awareness or a digital transaction.
Well, you just mentioned something. You just mentioned interest, which, I mean, we've been chatting about things like search, and that's it. It's not only a medium; it's also an indicator of something. So, tell me more about what you're doing here with search and how you're thinking about it.
Well, I mean, look, search isn't just a performance media. I think it also gives us very valuable insight in real time in terms of not only how the customer is shopping, but what attributes they're shopping. And most importantly, we have the ability to get very finite and understand them at the postal code level, and understand as well, not only which postal codes have the highest composition of audiences we're looking for, but also which postal codes are the most interest. So, we've been working, very closely with our performance team to try to lift that information, out of, our digital efforts, and kind of combine that with, how we're looking at things from a strategy perspective, even taking that information to move farther up the funnel and be more accountable with our upper mid-level funnel mediums, and make sure that it's aligned as precisely as we can with the performance side of the business. Again, I think, it comes back to accountability. It comes back to more meetings that land on, more propositions that land on the CFO's desk, that, we do need to be, operating with that level of responsibility. At Glassroom, we practice radical transparency. And I think these are all just ingredients in that recipe. But we're finding more and more that, we're seeing marketers, asking, what do I get? Besides reach and frequency and awareness and digital transactions and web visits. So we've been spending a lot of time recently building infrastructure to be able to report back on that beyond just a traditional digital dashboard.
Yeah. And it's interesting you bring up the CFO, because it becomes a question of, money in and money out. But I also hear things about sort of sizing the opportunity to say, look, if we had extra money, here's what it turns into.
Absolutely.
I mean, it sounds like a bit of a paradise from a media agency perspective, of the ability to make a case for a strategic approach.
Yeah, I think you can't always let the machines do the work for you, right? And I think, as we take the transactional side back into strategy, understanding your customer, and I don't want to repeat postal geography, but understanding your customer at a geo cohort level allows you to kind of map out your customer opportunity, at a national level, but in a way that's very precise and very accountable. When you get to that level of granularity in your strategy, you're able to, truly size, your opportunity, and really understand the size of your customer universe. Again, beyond socio-demographics, right? We can start looking at, composition in terms of population size. We can look at composition based on interest and active shopping behaviors, and then really understand what a conversion actually is. And more importantly, when we report back to the CFO, how much should we be spending? And then doing modeling around the actual size of the opportunity versus just, a very basic gen pop description that I think a lot of media strategies are doing, because they reduce it down to very simple currency to buy the media.
I mean, what you're describing sounds like Canadian agencies actually have some kind of leg up in terms of international in a way, because it's an understanding of the sort of our media landscape, or our sort of traditional history with, direct marketing. So it's interesting to, like, are you seeing sort of clients react to that kind of approach where they're like, Canadian agencies have a sort of an angle to it?
Yeah, I mean, we never really come down to, we don't do a lot of comparisons anymore. Like, our economy is much different than the US. I think it's easier to buy because our population is so condensed into, you know, 3+ major city centers. What is interesting though is we do see a lot more emphasis on precision. We
Mm,
see a lot more emphasis and accountability. We're getting a lot more questions around, if I spend this, do I get that? So it's causing us to be a lot more scientific in approach. And again, um, looking at the customer at the most granular level possible, but not just in terms of digital media. We've been doing that in digital media since its existence, but really re-examining channel strategies and mainstream media channels based on their ability to deliver at that level, and doing more cost analysis. I think now, based on, instead of looking at just at a CPM level and qualitative engagement, um, we've been looking at it a lot more around granularity and precision and getting what we paid for. I think those conversations have been very well received, on the marketing side, because I think a bit of a shift in our strategy was like listening to our clients and listening to marketers out there and trying to understand what's keeping them up at night. And I think what is keeping them up at night is, to have a clear and visible linkage between their dollar spent and transactions created. And I think what we're trying to do is give them feedback, or return of information that allows them to have those discussions with, their financial and procurement departments, to be able to rationalize how much they're spending, give the financial people the right insight into what they should be spending, and giving them the tools they need to be able to scale the business based on you know actually showing them how many customers are in the marketplace and the right way to scale.
sure. So let's just put geo aside for a bit, and you've mentioned a couple other things. One is you've mentioned the upfronts. I wonder, what other burning issues do you think that are up there? I mean, besides media inflation, that are essentially on your front burner right now as you deal with these issues.
Well, I mean, I don't want to take inflation away right now, because I mean, I find that media pricing is definitely on the long tail of economics, and we see that 6 to 8 month lag. Um, I think I think inflation is absolutely probably the primary indicator right now, and it's not even so much around. It's about managing the value of media, because every time you do a negotiation, you set a precedent, obviously, for pricing. But if I've heard it once, I've heard it 1,000 times in the past month across all industries around supply chain issues, the cost of human capital. I think we're in for a pretty big surprise this year. And that pricing isn't going to be arbitrary. It's just that things cost more. I think, our clients are starting to have to increase their product costs. What's the tipping point? I think that inflation is probably going to be the biggest issue that we're going to be facing in the short term and midterm future. And I think we're trying to prepare for that. We're trying to understand the media economy. A lot of the times too, is like, audiences aren't growing, especially on mainstream channels. Sometimes inflation is used as a way to kind of offset, short-term audience deterioration to maintain profitability. But I think that that's probably the most complex issue that we're going to face, and we're going to start understanding tipping point in terms of value of media, just as much as our customers are going to start understanding the tipping point around pricing in the marketplace. It's not going away. If you're not prepared for it, I think a lot of people are going to be in for a big shock in terms of how they're planning, in terms of their agency cost guides. There's going to have to be some give and take. It's a supply and demand business. And I think what I'm mostly interested in, will demand exceed supply? And if not, how do we stabilize pricing? Because I honestly think that this is going to be probably one of the most aggressive upfronts we've faced since fall 2003.
Really? I do wonder about sort of the media currencies on which these negotiations happen. Because it seems to me like, and correct me if I'm wrong, but when the sell side has one idea of what's a good audience and a good price for that audience, and the buy side has a completely different evaluation of whether it's on a media currency basis or on a outcome basis,
Yeah.
and they're not seeing the same things. It's like, is that an advantage to the buyers, or is it just something that's been around all the time?
I think it's an advantage to us as an independent, just because we have the ability to be a lot more flexible. And I think that the
What do you
agents,
mean by flexible? Flexible in what way, though?
well, I mean, our company isn't built on legacy trading models. It was built from bottom up. And I think we have an ability to see the market a lot different because our remuneration models are not built on the same ones as holdcos or other traditional models. And I think, I actually see this upfront period as a real opportunity, I guess, to reorganize and reprioritize the right channels based on what we know and how we're able to identify
Mm,
the opportunity audiences that we're going after. And I think we'll be looking at pricing with a different lens this year and favoring precision over scale, and looking at things through a completely different lens. We know there'll be inflation, and I think a lot of what we'll be looking at is, unlike I think some of our competitors will be looking at it like what's bearable, because their profitability models are, tied to buying media in the upfront at the lowest
mm,
prices possible and reselling it to their clients. I think we have a bit different type of approach that I think will allow us to kind of rethink about, what,
okay.
not only what the right channels to trade on is, but value exchange. And I don't want to talk too much about that,
Yeah,
obviously.
no, of course, it's your secret sauce, right? You're going into
I wouldn't,
negotiation.
I
Get it.
wouldn't say that, but there's a few things, I guess, in blueprint right now that we think will be definitely to our advantage.
Yeah, I mean, you just look at what's going on in the United States with sort of all the media currencies on in broadcast television, connected TV, and sort of almost like a redefinition of media currencies, and you're heading into these negotiations, and everybody has the historical data maybe not be as applicable. So, I mean, Canada seems to be behind that curve. The Americans are leading in this mess.
It's not such a bad thing. I think we're so conservative that, I
Hmm.
think the one good thing that I think our industry does very well, if we don't know, we hedge until we know with absolute certainty. And on that side of things, I think, as much as the industry has screamed for more CTV type of products and et cetera, I think we may move a bit slower on the media supplier side than the US, but that conservatism, I think, is also to the benefit of the advertisers and the benefit to the media buyers. So, as much as we want to move quickly, I think we do so cautiously, and I think it's better to hedge sometimes when you don't have all the information you need, rather than making bad decisions with your client's money, and on the sales side with your client's money.
Yeah.
So I think we've been doing things in the right way. I've seen a lot of the media companies on the vendor side and the content providers do things in the right way. I also think we are a lot less cavalier, and it's not the same type of cowboy approach to the market where go to market, figure out the issues later. I think what our industry does really well is to bring agencies along with the decision making that the top media companies are doing. I've been part of many roundtables and many leadership summits, and I think we're really great at getting the right people around the table to have an honest discussion. giving the media buying community an opportunity to have their say. And with that, I look at a lot of the senior executives on the media partner side of the business, on the media company side of the business. I have to commend them for that, because it does feel very collaborative. Rate negotiation is rate negotiation, but as an industry, I think, especially in the last 10 years, we've moved together.
Mm.
We've had really good conversations. Tension has been minimal. And I think everybody's committed to doing the right thing.
Well, that's great. Okay. Um, well, any final sort of thoughts that you want to bring up? Any sort of, you know, something that's keeping you up at night or sort of in your hands that you're trying to figure out?
I think, you know what? I think what's great about the business right now is that we have the tools. We have the tools to make good decisions. I think we have the data capabilities to make good decisions. I'm really enthusiastic about how kind of strategy has changed.
Mhm.
It's more about looking at our data and analytics capabilities and trying to figure out what if. I think the industry is starting to reward the yes and partnerships versus the no, what was your question, because every business problem is different. I think there's so much you can do. It's just, I think now strategy is really driven around the art of possible, and asking the questions, and instead of relying on the machines to solve
Mm.
those
Okay.
questions for us. I think the human input is very important to bring that accountability back, and to design new products that essentially give the accountability on how we're spending our clients' money, and turning that around from an operating expense to a business investment.
Mm.
I don't think I haven't had more fun than I have in the last year. I think when you surround yourself with great clients and great partners and great capabilities, I think the what you can achieve is endless, and I start gravitating towards those partners, and great partners that we work with, to help solve business problems. And I think that's what keeps me up at night. But I think if you have the right people at the table, and you learn to be highly collaborative, and lose the traditional agency insecurity and gravitate towards working with the right people, I think you can move mountains. So
Yeah. Okay. Well, it's very forward-looking and optimistic point of view as we head into sort of turbulent times with inflation and
we'll see.
all sorts of cost efficiencies going on. But listen, I thank you so much for the conversation. We obviously been chatting about this stuff for many years, and we'll continue on our journey as we think these things through. So again, thank you for spending some
Yeah.
time
And
with us.
I look forward to the 2.0 after we figure out what's happening this fall. So maybe we can reconnect on that in July.
For sure. Awesome. Okay. Thanks, Scott.
Appreciate it, Chris. Take care.